Hi, everyone. Welcome back to your latest Carson's Take 5. Ryan and Sonu here. Sonu, all that glitters. And that's a play on, obviously, gold. By the way, what does Sonu mean again?
Sonu is an offshoot of the Hindi word for gold. Sona is gold. So Sonu is just, a name of endearment. So gold. So speaking of like all that's glittering, I'd like to think we're both glittering right now, I think. Or maybe it's just the afternoon, it's just the afternoon period, and we're just tied out when we're recording this. But
yeah, we are, and we're thinking about something to talk about. We're going to dive a little bit more into gold because I've got the numbers. I'm going to look down on my screen here. Gold is up 13% back in 2023. Gold is up 26% last year, and right now, gold is up 35%. This year, so far year to date, was obviously a few more months to go. Sonu, we could spend all day on this, but high level, why has gold done so well the last 3 years?
I think simply put, it's a currency diversifier.
Okay.
What have we seen? And especially this past month, right? We've seen bond yields across the developed world rise, right? That usually tells you there's an issue with inflation. But at the same time, we're seeing central banks cutting rates, right? And including the Federal Reserve. Markets are expecting the Fed to cut in September. Yep. I'm not saying, that's a lock. You and I have spent enough of time talking about that. But by the end of 2026, markets are expecting at least 6 rate cuts. So cuts worth at least 1.5 percentage points, right? So that's a lot, right? And that's even as inflation is running slightly hot and maybe going in the wrong direction. But it's the same thing in the UK. It's the same thing in Japan. It's the same thing in Germany and France and all these places, right? And then you have fiscal spending as well. Deficits are going up, right? The Congress in the United States just passed a big tax bill. Yes, we are collecting some taxes on the other side in the form of tariffs, but the same thing's happening in France, same thing's happening in Germany, Japan, all these places, right? So when all of this stuff is happening, it's basically, I want to use this term carefully, debasement. Right? Essentially, like the central banks are sort of saying, you know what, we care more about growth than inflation, but then investors do care about inflation. What protects wealth over the long term? Historically, it's been gold.
Yeah, I mean, hard assets in general, right? When there's a lot of inflation, hard assets do well. Obviously, you drop it and it hits you on the foot and it hurts. That's a hard asset. That would be gold. Also, central banks. We get this data. Central banks have been buying extreme amounts of gold. There was some data going out just a week or so ago that central banks own more gold now than they do U.S. Treasuries. And that's like, I don't know, first time in history, but the first time in a very, very long time. So the reality is, listen, it's not like stocks haven't done well. I mean, stocks are literally hitting all-time highs all around the globe. Also, back-to-back 20% years in the U.S., up double digits at the time we're doing this year, probably a little more upside. So the reality is both asset classes have done really well. But why should someone here, Sonu, have, obviously we think U.S. stocks are still a really, really good place to be for the long term for investors. But let's say for the next 3 to 5 years, because I know we look at strategic models, 3 to 5 years, we think gold still has a place in a portfolio, right?
Absolutely. And we are overweight stocks. We still like stocks. And I would say if someone asked me, what's your best inflation protection? What's the asset that will protect me from inflation over the long term? I usually always say stocks do.
Yeah.
Because companies are able to pass on costs, right? Profits are nominal and things like that. So yeah, stocks are a real asset as well, except I love your definition of now you can't, throw a piece of paper saying you have, showing your holding and say Apple or Google, not a recommendation, but and it's not going to hurt your foot, right? Gold.
They have big buildings, though. They have big buildings that'll hurt your foot.
Yes, well, that is true. That is true. Yes. So stocks protect, but then you want diversifiers in your portfolio as well. And during a period when you have more volatile inflation, maybe slightly higher inflation than we've been used to over the last 20 years, bonds may not act as the diversifier they historically have been, and you need something else. And I think gold fits the bill.
Well, I mentioned how well gold has done the last few years. I mean, bonds have not done well, right? I don't need to tell people listening to this. Bonds haven't done all that well. Doing a little bit better this year, but the last couple of years, it's been tough. And again, we've used this phrase before, probably heard it before, diversify your diversifiers. If you think about a 60-40 bucket, 60% stocks, 40% other stuff, usually think 40% bonds, but we're saying, you need fixed income, yes, but maybe some of the other stuff in there, cash, managed futures, some gold, those make sense. I mean, so how are we doing time-wise? We've got another minute or two. What else do you want to talk about from your namesake, gold?
Yeah. No, I think going back to something you brought up, can gold go up while stocks are also going up? And it's not just US stocks, right? We are in the middle of a global bull market.
Yeah.
So I think one thing that's happening, and maybe this is not talked about much, is that people do want some inflation protection when you have higher deficits, when you have, falling bond yields, right? But at the same time, because of, central bank cuts, even as you have higher inflation, so there's that debasement theme, but you want to protect against inflation. How do you do that? Gold and stocks.
Yeah, we always talk about gold, like gold is $3,600 an ounce, right? That's dollars an ounce, the key word. But if you look at gold relative to just about every other major currency out there, gold is breaking out to new highs against them all. To me, that is a bull market. Now, you think about gold, it's only been going up for a couple of years here, really. I mean, gold went up a whole bunch from 99 to about 2011, 2012. And they went sideways virtually for 10 years as stocks continue to do well. And now gold's getting going again. But Sonu, here's one thing, maybe I'll wrap it up like this and then let you have the final word. We were on record at the Carson Group several years ago, back in 2023, saying, listen, we could be in a period for years where gold and stocks go higher together. We got some really weird looks. People weren't very bullish on stocks, or maybe they like gold or vice versa, but both of them say they could do well. That wasn't popular. Well, both have been up the last 3 years, but there is a period back from 2003 to 2012. So that's 10 calendar years. Sonu, gold and stocks were higher during any 1 year, 9 times. Okay, so they both went up 9 times out of a 10-year period. Only 2008, when stocks were crushed, gold did okay. Did one of them fall? But the reality, you can have years with both of those asset classes doing really well. We're 3 years into it now. My personal opinion, we probably have a little bit more, maybe a good deal more to go on that front. How do you want to wrap up this latest Carson's Take 5?
I couldn't agree more. And I think in a period like this, I mean, you said it, I think you want to diversify your portfolio. And this doesn't mean you don't hold bonds, right? Just because you're holding gold.
Exactly.
You don't throw out all the bonds in the portfolio and just go buy gold. No, we're not saying that. You want a bit of everything. But I think, the most important piece is probably that, we're in a global bull market, so own stocks, but own diversifiers too. And right now, gold is a good diversifier.
I'll put the ball on the tee for you here because we talked about this a little bit ago. Those 10 years I was mentioning from 2003 to 2012, what did really well besides gold?
Emerging market stocks.
Exactly.
Right. And developed
around the globe, stuff around the globe.
Around the globe. Yeah. Emerging market stocks. Again, this is not saying you should go buy emerging stocks today or tomorrow, anything like that. But have a diversified portfolio. Diversification didn't work over the last decade. It paid to be only in U.S. stocks and maybe even technology stocks, right?
Large ones, the big ones, right?
The big ones, exactly. But now maybe a time when that works out.
Absolutely. So everybody, this again was your latest Carson's Take 5. All that glitters. We'll see everybody next week. Take care. Thank you.